Hello and welcome to another episode on my YouTube channel. My name is Amit Maurya, and today I'm gonna talk about ETF. This is more along the line with the series of figuring out which stock that you may potentially want to buy. All right, so this is more like a reverse tool. Most of you who are experienced already most likely will is doing that, but if you're new or new to investing, you might don't know that simply because you just haven't heard. So most of you probably heard of stocks, right? Walmart, Apple, right? And then these are individual companies that you buy in. And then after that, there comes ETF, exchange. Let's look at what's ETF. ETF, right? Exchange traded fund. Basically, it's a basket or collection of bunch of other stocks, so that if one company goes down, you are still. It's a great way to diversify. In other words, so an exchange traded fund is type of security that involves a collection of securities such as stock, often tracks underlying index, although they can invest in any number of industry sector or various strategy. What this basically is saying that this ETF for literally every single market and industry that you can think of. If you think of, like, let's say you wanna only invest in healthcare sector, you can find only healthcare ETF. Let's say you only want to invest in all of the consumer companies that deal with that, you have that. Or if you want a company that mainly deal with, like, let's say gold and silver, there is ETF for that. Let's say you want to deal with well diversified ETF, there is one. This one particular ETF that I want to talk about, and from there, basically, how do you find the companies that they are invested in? So basically, either you can save the money by doing it yourself by investing in those company, or you can basically go ahead and invest in that ETF and pay that whatever the expense fee is, and still enjoy that basically benefit. The benefit of investing in ETF is that you don't have to do a lot of work. You just put in the fund, and long as the, let's say if you're doing passive one, the one I'm going to show you is passive income one. Is very popular amongst many people, especially the ones that are focused on passive income or dividend growth. All right, and you want to know which company they own and so forth. So let's get it started. So here's a company, not company, an ETF, SPHD, right? This is my Robinhood account. I just simply pulled it up. Powered. So this is by PowerShare, S&P 500 Dividend Low Volatility ETF. Their price right now, right today is Saturday. On Monday when they open, they're gonna be somewhere around $33 to $34. In 5 years, they really haven't much gone up or down. They were around $40, and because of the COVID-19, since January, February 14th, they've gone down about $10. So in 5 years, they're really about $5 difference. Okay, so when you invest in ETF, don't expect to make a lot of money because they are not supposed to be go up and down all of a sudden. They're supposed to provide you basically security, unless that security in terms of money, your money is not going down, and they have very specific purpose. In this case, this particular ETF, people buy it, or their purpose is that a dividend. They have right now 5.47 APY or percent. I don't know if you would look at APY, but this is yielding, so percentage wise. And there's about, on average, about 1 million people trade in a day, average volume. and there's about $2.52 billion asset under this ETF. That's how much money this company has, and highs and lows. Right, in history, I have gotten 15-cent dividend. That was back in June 28, 2019. So 1 year and 1 month from now. I owned it. I sold it a long time ago because I I don't know what I was doing at that time. I was still learning a lot of stuff, just trying to figure out things. So let's figure out which company do they own. So from here, you can't really, Robinhood doesn't really show you what they own. So that is why you can Google, right, of the same ETF. There's a website named ETF.com, and then you simply just put in the whatever the ETF, in this case SPHD, I put in, and they give you a little bit data. If you go down, 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 they'll show you basically top 10 holding. So you can see, which is Iron Mountain, Williams Company Inc., Altera Group, Philip Morris, Gilead Science, Progressive Insurance, General Mill, International Business Machine, Dominion, and AT&T. So out of this thing, there's some things that you can draw a conclusion, right? If this company has invested in this company and that's how they are paying you dividend, if you really wanted to basically take a shortcut and not pay that 0.33%, there's a fee is about 30, expense ratio is 0.30, 0.30. You could literally go ahead and buy the AT&T stock or Dominion Energy, and most likely you will come out very close to what they are paying. But here's the problem: if you do that, if you, let's say you only bought this AT&T or Dominion, and if they went down and drastically, you would lose a lot of money. On the other side, all of a sudden these two companies, let's say you own, they went up in value, you will gain a lot of money. But in ETF, that doesn't happen that often, unless that a lot of people are buying that ETF itself. Okay, so that's what you're looking at. But this is not all of the company that they have invested in. If you look at their sectors, they are in financial, consumer, utility, energy, consumer cycleless, healthcare, telecom, basic metal industry, and technology. So this is very well diversified industry that they have put it in basically for you. So here's another tool that I use. So Childswap. I like this because I have one of my account with them. So let's pull up the same one, which is SPHD, right? SPHD. So let's select that. Childswap gives you basically all of the holding that this company has. So if you go down, right about here, holding weight, withholding, and you can look at all of their holding, and I have looked at it in advance. So they have about 50 companies that are paying them dividend, and in turn they collect that dividend, and then they go ahead and pay you the dividend. So basically all you did was you would own SPHD. They will give you every quarter their dividend, whatever 30-40 cent that is. Let's see how much they were giving you dividend. That I had it somewhere here. It's normally about 30-40 cents, I believe, if you look at here. Excuse me. So 5.48. Okay. I don't know, guys. Maybe let's look at here. SPHD. HD. Okay, so they were paying in terms of maybe somebody. Okay. 15 cents. Oh wow, they really have cut down their dividends. 15 cents, 15. They used to pay 14. So 9 cents. So yeah, this is not much of a dividend. But if you come back here, let's get rid of this. All right, let's go back to their holdings. For example, if you go back to their holding, you can see they have invested in all these companies. You yourself go ahead and invest in these companies, and you can actually get more money. You would actually save money rather than that if you were to go ahead and make a portfolio. You can actually do that by going to M1. M1 actually allows you to make a portfolio. So here's my portfolio. I can show you. 1 second. Basically, I can go ahead and I hate this. 1 second. Traffic light. Let's find traffic light, guys. Okay, this time. So here's these portfolio that you see right here, dividend plus growth, right? This is just an example that I'm showing you. Here's all of these sectors. If I wanted, I could literally just call my own SPHD here, and then basically I would just go ahead and buy every single company in those. So I would just go ahead and copy every single company in that, and I can even do by the weight. See how they have this asset percentage weight? You can even allocate that in here. So you would instantly get that exact same thing, and you wouldn't have to pay any fees whatsoever. And what's great about this thing is that if you keep up with it, you can actually look at, they have done the research for you in terms of, well, they're not the safest company, because if you really wanted to be safest, then you should really look at the safety dividend of 99, like Apple right now has that. That's what the score they have given. But this is somebody else has done the research, and you can just reverse engineer it, and you can just use these companies and just invest in it. Essentially, it's kind of like a hack, okay? If you want to know, there's another ETF that most people like. It's called VTI, with Vanguard Total Stock Market. So if you look at their things that they have invested in, see Microsoft, Apple, Amazon, Facebook, Alphabet, you can actually just get one of these companies and just invest in. And not every single company pays the dividend, but you get I'm pretty sure you got the idea. Or there's another way that you can look at it. Any other, there's a SHV, I believe. SHV, yep. SCHV, Childswap large cap. This is another ETF that I am personally invested in. I have about 8 ETFs that I bought from them, and you can see the companies they are invested in: Johnson Johnson, Procter & Gamble, JP Morgan, Intel, Verizon, AT&T, Pfizer, Cisco, Comcast, Merrick, right? These all automatic. I get exposure, and I don't have to go and read about every single one of these companies and so on. This is what you pay the expense fees for those companies. So you have 2 options basically. If you wanted to do it yourself, you can basically look at these companies and just buy these stocks individually. Like, let's say I looked at Duke Energy right now, and I wanted to just own Duke Energy. Because before I didn't know they were any good or not, but since they are in part of ETF, right, you can assume somewhat they're good, but you should still do the research as much as possible. When you feel comfortable, you're like, okay, fine, all I want to do is just have Duke. You can use either Childswap or just go to your Robinhood account and just the Duke and Duke Energy, right? And you could essentially just go ahead and buy it, Duke Energy, and you automatically getting 4.5% of a yield in a year, and quarterly whatever the dividend they are giving out. However, again, you won't be right versus you were to buy the SCH. What is this? SCHV. You would have gotten a lot more exposure, 50 or so companies, right? In this case, yeah, 50 companies. So that's kind of what I wanted to show you. Another cool thing, this is, I'm pretty sure you'll find it valuable. If you have Childswap, this is obviously free, and you go on their research, and right now I have clicked on their ETF, and this is how I'm looking at the ETF. And now you wanted to basically, let's say you didn't know any of the ETFs, you can actually look at other ETF, what's going on. If you wanted to, small, mid, large companies or domestic, you can even look at internationally. You can look at even bonds right here, real assets. These are the commodities, like let's say, let's say real estate. Let's look at real estate ETFs. Here's this ETF, RDOG, right? And there's a bunch of them. Obviously, you're gonna have to read it. And what's going on here is, and this ETF has put in Stack, QTS, Cypress, Lexington, Digital, Global, right? These are all the companies that you yourself can go ahead and then buy it and then build your own portfolio. It's kind of like doing hacking. I don't know, cheating or not, but all right, guys. So that's how you can research other ETFs and get to know. All right, guys. Thank you very much. As always, I really appreciate you guys following, watching, and sharing my content. If you like it, if you really want to, you can subscribe it, but I'm not gonna beg, because subscription doesn't really mean anything on YouTube nowadays. What really means is that you're more likely to watch it. But I know if you found this content helpful, you will do the right thing and you will like my content. You will share it, and then you will subscribe it, obviously. Just being yourself is enough, because all I care about somebody listening and watching my video, and potentially they finding values. And I'm hoping that you guys taking advantage of what I'm sharing with you guys. Okay, thank you. Talk to you later. Bye bye.